Alrighty, guys, thank you for joining me today. We have some great information about portfolio loans today. I'm here with Sergio. Hi, Sergio. Good morning. Let me know a little bit about yourself.
Well, good morning, Ross. I appreciate the opportunity to speak to you and to your viewers.
Yeah.
To introduce myself, I'm Sergio Melendez, Senior Vice President for Freedom Bank here in McAllen. And wanted to share some information with you regarding different loan types when it comes to real estate lending. I know many folks are looking to either purchase primary residences, investment properties, second homes, vacant land, construction. There's so much going on right now in the market that there's a lot of information to share. But for today, we want to learn a little bit more about what a portfolio loan is, right?
Yeah.
And when we talk about portfolio loans, we talk about an alternative type of program, or it could be a primary source loan.
Okay.
When we think of lending, we think of there's the option to go Fannie Mae, conventional loan.
Yeah.
There's government-sponsored loans like FHA or VA that are out there.
Yes.
Primarily, some of those are for primary residence, but some of them can be used for investment properties or second homes as well. So then when we talk about a portfolio loan, it's an alternative program, right?
Yeah.
Where it's not a loan that is potentially sold to Fannie Mae or a buyer. And so mainly portfolio loans stay in the bank's portfolio. That's why we call them portfolio loans. And they're serviced by the bank. But it also gives us some sort of flexibility on requirements to qualify for that type of loan. It is an in-house decision, a bank decision to lend on those types of loans, and so it gives an advantage for some borrowers that may not necessarily want to go or able to go the conventional or government-sponsored loan route. Right?
So I know Fannie Mae, it's been really big in the news right now. Fannie Mae might be restricting people from getting their second home or even getting investment properties to grow their wealth. Once people reach their 10 gap with Fannie Mae, they never really decide to say, you know what, I'm going to stop right here. I want to continue. I want to grow my business. I want to grow my real estate empire. So what is a portfolio loan when you say it's in-house? What does that mean?
So many of the same documentation is required in terms of there's an application process.
Yes.
There's a credit review.
Yes.
Income documentation required, so there is income reviewed, assets are reviewed. What we do is we take a look at it. We take a common sense approach. We do follow in-house guidelines, our own guidelines. We don't necessarily follow Fannie Mae guidelines or investor guidelines that are outside of the bank's control. And so what that means is that we're able to make that decision here. We're able to offer more expansive programs that will help individuals that are maybe self-employed and may not have the work history that is required by Fannie Mae or by other investors in the outside. And so that's where that portfolio loan program comes into play. And also the portfolio loan program can also cover certain types of properties that may not be eligible for Fannie Mae, like condos or certain types of properties that don't meet the requirements.
So my second fourplex, I worked with Freedom Bank and I was able to get a conventional 30-year mortgage. In the future, I want to get a portfolio loan. So what are the terms? What am I looking at as in not 30 years? What are the terms for a portfolio loan here at this bank?
Well, the portfolio loan does require a little bit more of a down payment requirement. Many times for conventional financing or FHA financing, there may be a lower down payment requirement, but typically anywhere from 10 to 20% is required depending on the type of property you're looking to buy. Also, we do offer a fixed rate for up to 5 years. It is amortized over 30. But throughout those 5 years, your interest rate's fixed, and then it varies after that. So it's an adjustable rate mortgage, an ARM that we call it.
ARM. A lot of people in 2007, 2008 are kind of worry about the ARM. Is it going to change? It's going to jump from 2 to 14%. Right. What are the caps? Is there like a certain limit that the bank goes to, or is there a minimum that the bank goes to after it adjusts?
Right. So certain laws were put in place after the the 2008 market crash, right?
Yes.
So now adjustable rates are used as more of a strategic type of product where there are protections in place, there are caps. So the fixed rate will be fixed for up to 5 years, right? And but then after that, you're wondering, well, what's my interest rate going to do? Well, we follow a certain index, and depending on where that index is on year 6, it may adjust lower and it may adjust higher, but there are caps in between. So there are limits to how much the interest rate can increase, and there's a lifetime cap. It cannot increase to a certain amount. So you are protected from that volatility that we saw back in 2008. So you wouldn't see rates jump or catch anybody off guard, and plus you're notified well in advance and disclosed up front what the potential increase and decrease of your interest rates are. And so that's what's changed from 2008 to now, where folks are more comfortable with adjustable rates, especially for investment properties, and be able to be okay with that. We also offer what's called a balloon type of loan program where the interest rate would be fixed for 5 years, and then it balloons, meaning that the term is due at the end of that 5 years. But what happens is that we're able to renew that loan for another 5 years, so long as so long as the payment history is there, the performance of the loan is there.
So people can refinance after those 5 years, get a new rate for the next 5 years, and then continue to pay down the mortgage.
Well, it would be a renewal, not so much a refinance. It wouldn't be a whole new loan with new terms. It would be an extension of that existing loan for another 5 years, and continue on the overall term, which may be up to 20 years, right?
Oh, that's great.
And so every 5 years, we look at it, gives us an opportunity to revisit the credit, and then renew it for another 5 years. Interest rate may or may not change. Many times it doesn't, but we take a look at it at that point.
And how do you see the market right now? How do you?
Well, I mean, I think the real estate market for the residential side has definitely been something that we haven't seen in a long time.
Yes, interest rates are extremely low. You know, at the lowest I've ever seen in my lifetime. And I'm not that old, but I hear stories about people in 1980s were paying like 14%.
Yes.
And now they're paying 2% or 3% or 2.5%.
We weren't around in the 80s to buy homes, right? We're not there yet. But yes, the interest rates that we've seen, especially late last year in 2020, mid to late last year 2020, were in the 2% range.
Yeah.
You could get a 30-year fixed mortgage for as low as 2.75, and in some cases even lower. They have climbed a bit beginning this year. Now you're able to get a 30-year fixed mortgage at maybe a 3.25, right?
Yeah, that's still
which
great.
is still historically low. I think we got a little bit spoiled with the 2%, and so. But yes, definitely a time to continue to look to buy or build because of the rates.
I hear a lot of people about building. Material has gone up to like 600% for 2x4s and. Sheetrock and things like that. The pandemic's still working its way. Hopefully we get out soon. So what's inspired you to be where you're at today? What have you...
Well, personally, I've always had an interest in real estate and in banking. I started my career in mortgage lending, in the mortgage brokerage field, and then I went through the 2008 crisis like many others, learned a lot, learned about what not to do and use that knowledge to get into the banking side of it, and ever since then I've been in banking and I've brought that real estate and residential lending background to banking, and have combined it, and now I'm here helping the bank grow.
That's awesome. So my next question is about how do you see yourself retiring, if ever retiring? What are the vehicles you're using to retire?
Well, when I think of retiring, it may not mean the same as our grandparents' retirement, where pensions are given. Those are rare nowadays, and so we have to be a little bit more diversified if we plan on living a comfortable life in our later years, right? So for me personally, obviously, 401k is basic, right?
Yeah.
Putting into your 401k if you have that option through your employer, IRA on the outside if you don't.
Yeah.
Real estate investments is also something that I find personally is being a little bit more stable than the market. That whether it's a rental property, flipping properties. It's always something that I believe would generate additional income as well as growing an asset, right, over time. Real estate is good. Some also in the market, we see that the market is climbing, has been climbing for the past years now.
12 years of prosperity that we've had in the market.
Exactly. So I think what folks should do is get to know themselves a little better as far as their risk appetite. What it is that they find as a healthy way to invest without having to lose sleep over it at night. Also, educate yourself about the different types of avenues that you take when you invest. Right?
So he's not saying throw everything in Bitcoin today and let it ride to the moon. Like, there's diversification from stocks, real estate, sometimes crypto, sometimes a pension, sometimes 401ks, IRAs. There's tons of vehicles to get you to retire. Do you ever see yourself retiring one day?
I don't see myself just sitting at a beach somewhere drinking a margarita. I think I'll always be busy doing something. If it's not banking, it may be another business down the road or something I have a passion for. But it's always good to be. I guess the goal is that we want to have financial independence and diversifying where you put your money is I think is the path. The path to getting there.
Is there a situation where you how do you handle failure? Is there a situation in your life or in your 20s or something that you stumbled and you learned from?
Right. So when I was in my 20s, I was in the mortgage lending business back then, before 2008. And so I had put all my eggs in that basket at that time, young and hungry and ambitious. And we all, I think most of us failed in that industry at that time when the market crashed. And so, you learn from it. I think the way I handle failure and learning from that experience is you learn from it and you continue to push on. You learn from your mistakes, you learn from your failures, and you pick yourself back up and continue to push, and you'll see yourself out of it.
Is there any kind of like podcast that you're listening to right now, or is there a book that you like inspired you, that's something that drives you today or every day that you're like, I like listening to these people?
Sure, I like to listen to a lot of leadership books. I listen to podcasts and read leadership books. Lately, I've been reading a lot of Simon Sinek. He has several YouTube videos out there. So if you search Simon Sinek through YouTube or podcast, and you'll find him. He talks a lot about leadership and in the business world, and so that's what I've been listening to lately.
No, that's great. That's really great. That's awesome. So how can people reach you if anybody wants to come out there and say, hey, I want to start looking into portfolio loans or conventional loans or banking? How do they?
Anything from banking to all sorts of real estate lending, whether it's commercial, residential, multifamily, raw land, construction. We're able to service all those types of loans here at the bank, at Freedom Bank. And so if you'd like to get a hold of me, go to freedombanktexas.com and you can find my contact information there. Or follow us on Facebook, Freedom Bank Texas on Facebook as well.
And you have 3 locations right now.
Right, we're in Alamo, off of the expressway in Alamo, on Alamo Road and Expressway 83. And we're here on Olana between McCall and Jackson. And then we have a location, our original location is in Freer, Texas. And so we have a branch, our original branch out in Freer.
Well, thank you so much. And thank you for the great information today. And you guys have a great day. Thank you.